Good morning, friends. This is 1st of April 2021. I think it's a April Fool's Day, so happy April Fool's Day. Now, what the S&P 500 did, the reason I delayed the video to today morning was because I wanted to see the response of the stimulus package on the markets, and on the S&P 500. I think there was a sell-off going into the close. You can see that came off quite a bit. In my opinion, whenever the market has a not so great response to good news, often it is saying that the news is already priced in. So on the daily, S&P 500 has made a fairly negative candle. So that is as far as the S&P 500 goes. And if we get follow through on this candle, which means if the market breaks through the low, you could have a decline coming on S&P 500 because the stimulus package was anticipated, and now that's out of the way. Uh, Before we move forward, let me request you to like, share, subscribe the channel. And for membership services, you can go to the platinum, diamond, gold, silver, copper buttons and see what kind of services suit you. And questions, you can WhatsApp 98710 or email at ashwani_gujaral@yahoo.com, or just straight away go to the join button and take what you like. Now, two things which you need to watch is how is this going to impact the dollar index, which hasn't really come off because of this. It is still fairly strong, and the bond yield, which again hasn't really cooled off, still at 1.742. So basically, these criterias, the market still looks fairly strong. And the broad idea is that if rates and taxes are going up, that is a bit of a negative for the markets. So that should be taken on board. This morning, Asia is positive. You have SGX, which is up about 100 odd points. So how do you trade the market? I don't think, buying into this gap up is really the wise thing to do. On the Nifty, you have a bit of a inside bar pattern. Now, inside bar pattern, whichever way the high of the smaller bar or the low of the smaller bar is taken out, that is the way you generally get follow through. But because you are going to open with this sort of a gap, I don't think buying the gap up becomes a viable option. Also, it is possible that post the first half, you could have a bit of a decline if US futures, etc., continue to have downside. So on the pivot, you have 14,775 as your R1. So chances are market opens above this R1, and if this price level starts to get rejected, you could possibly have a trade on the downside, because overall, this 14,800 to about 900 zone remains a stiff resistance. Yesterday we had FII selling about 1685 crores. So we'll have to see whether FIIs again come back to sell. We see, so in case this 14,775 gets rejected, the pivot level is 14,722, and then S1 is about 14,638. The other relevant point is that on the weekly, R1 is 14,834. So even this level could be used as a trigger zone. I don't think on the cash we are likely to reach 14,834, but even here a rejection would possibly lead to downside if this level comes in. See, basically the markets are all over the place. Every day they find a new reason to go up or to go down. So the way, you should be trying to deal with this market, with all this gap up, gap down, is take one side and make a spread. So the way I am doing it is, we have the 14,700 put and we have sold the 14,400 put. So it makes a net spread of about 100 points debit. So that will not bother you a whole lot. And if the market shows you momentum in one direction, then you basically tend to benefit. If it's just going to hang around, then obviously all strategies will fail. But the idea on options is that the market is just spending time and not showing you directional moves, so the debit should be less. The main issue here is the bank nifty. The bank nifty yesterday uh, was down quite a lot. Nifty financial was down quite a bit. Now, some people say that this is MSCI rebalance, etc. We'll find out. But this weakness on financials will not bode well for the Nifty. So that is something you have to watch for today as well. On the bank Nifty, again, I think R1 is 33,657 on the cash bank Nifty. If this level gets rejected on the downside, then short trades are possible. So the view is that if the market starts to give up gains from the upside, short trade should be looked at. I don't think the stimulus package or the infrastructure plan is a very sustainable reason for a rally. So that way you will see a downside coming in. Overall, I think FMCG, pharma and tech remain on the upside and financials on the downside. So that is the sort of sectoral, allocation you should keep. And we'll have to see how this first day of April pans out in terms of institutional flows. And post that, you should be able to take one view or the other. So far, the market is sideways, and I don't think anything much can be gauged from this. So the idea is that if you see rejection from higher levels, you should think about getting short on the market, because we are approaching resistance zones, and there does not seem to be great amount of triggers for a sustained upside. So that should be it. Take care, trade well, and please consult your financial advisor.